Hello, everyone. Welcome to EPSMomentum Live. We are going to go over a couple of tools for you to make great investments, great stock picking. So before we start, I'm Alex Carto, and I'm the CEO and founder of EPSMomentum.com. We create this platform to help every investor find great stocks out there in a very easy way, in a couple of clicks, finding the the stocks that are really relevant for your research. Obviously, this is not investment advice. This is just tools for you to help in your research. You need to do your own research yourself. Be sure to study every single investment that you want to do. But that's a classic disclaimer. But I really want to reemphasize this. Nothing that you're going to see here is investment advice. Just really tools to help you find great stocks. Before we start, we're running a discount, like a Cyber Monday discount. You should have a banner going at the bottom where you can have a look at the coupon code. So it's BFDY24, and that will give you a nice discount. It's 20% plus the 45% that we already do off. So we really want to give you the tools before the end of the year because this is the best period of the year. December and January are meant to be the best month for investment. So hence, us giving you the ability to get those tools for a very affordable price. And by the way, the price is the following. You get monthly and annual, so you get 45% discount on annual, which is the best deal, and then you can get 20% off if you actually type the coupon code. Okay, so let's get started. How do we start with EPSMomentum? It's very simple. There's a button called Start here, so it can't be any clearer than this. So you can look at it. There's a video. You can see it, and there's 14 minutes. And then there's another button called Then here, and then it goes over the additional tools, and again the 14-minute presentation of the video of the site. Anytime you have those little triangles here, it's actually a video. So you have about 14 different applications here, 1, 2, 3, 4, and so on. You can turn them on and off as you wish, and every application has a video. So if I click here, I get a video of the cashback PE widget. So again, 14 application you see on the top. At the bottom, you see a very powerful screener. We'll go over it in a second. But yeah, there's hundreds and hundreds of fields that you can search for. There's also guidelines. The red ones are some of the most important ones. So we'll go over it in a second. But as you can see on the top, there's a bunch of buttons that help you get straight to what you need or what you want right from the get-go. So, guys, let's start. Let's get a coffee. I hope you had your cup of coffee this morning, and let's get started. Okay. So the entire site is based on filtering stocks from the fundamental to technical standpoint. So fundamental first and then technical. In fact, everything is summarized by this signal here, which is either red or green, right? So it's either red light or green light, pretty easy. There's a fundamental piece on the side here, which is the earning momentum, and there's a technical piece on the other one, on the right. So it could be fundamental tells you if it's a good stock in terms of earning and sales momentum, and the timing momentum tells you if it's the right moment, right? So you can have a bad stock at the right moment, which is what we have here, or you can have like a very good stock and it's a bad timing, right? So let's start with the momentum. How do we start with the momentum? Very easy. You run the video here, and I just want to highlight one little visual, which is the S-curve of a product. So really, how a company pick products, launch products, introduce a product, make the product grow and sell, and then eventually mature and decline. So those S-curve are found a little bit everywhere and anywhere when you look at companies and products. So the best example of this is Apple, where you can really cherry pick for the last 20 years or spot when they launch every single product, from the iPod to the iMac to the iPhone. There's always that S-curve that actually pushed the Apple price higher. So what do we do with this? Well, the most important thing on that curve is to actually spot the acceleration. So I'm going to put that in the big screen. So the acceleration here is when the curve tilts from an introduction phase to the growth phase, you really have an acceleration there. And also, when it goes into the mature stage, you have a deceleration, right? So those two are very important. What we do is we look at earning and sales. Video is giving me a hard time here, but we look at earning and sales for both those variables, and we see if there's acceleration and deceleration. And then we run. Video is really giving me a hard time for some reason. Maybe it's the bandwidth. Let's start again. And then we score those stocks between plus and minus 50. So if a stock has a very good earning momentum but no sales momentum at all, it will have a stock price between I'll say 0 and 10, or sorry, it will have an EM between 0 and 10 or positive 1, but never above 20. So the threshold is 20. So this is really giving me a hard time here. This is better explanation here. So again, if earning and sales are in momentum, then you have a score greater than 20. If one or the other, either earning or sales, has a momentum or a breakout, you're between 0 and 20. And if it's below 0, you just ignore all the stocks. Okay, so to make it clear, out of the 4,000 stocks out there, there's really only 3,900 roughly that are above 0. So that helps you really get rid of the noise and all the stocks that are, on TV or here's this, here's that. Just forget about them, right? If you want growth stocks, and if you want something that is proven by data from the last quarter, last 2 quarters, or 3 quarters, this is a very good filter, right? So every stock that has an EM greater than 20 is absolutely amazing. Every stock that has an EM greater than 0 is okay, so I would say, but greater than 20 is really really powerful. So clearly, the EM here shows up every quarter, and we can see on this one clearly that it's not a match. It's a minus 16, minus 16, minus 14, and so on. How can we check that? How can we check what's behind the earning momentum or what's inside that? Very simple. You will click on the matrix here, the application called matrix. So as you can see, there's a yellow line here that tells you if the application is running or not. So you click on the matrix, and here I can see the earning per share for the last quarter, the one previous 12 months ago, and the one before. So that's 12 quarters in the last 3 years of earning per share. The growth here is 6%. So it was -8, -4, so not that great. 6% is positive, yes, but not that great. There's a little bit of an acceleration. You can see the acceleration here, and we can see the growth. And we can flick to sales, and sales, we get 1% growth in sales and a 6% acceleration. So yes, it doesn't make the cut, right? It doesn't work. So if you tap another stock like Facebook or Meta, okay, so now we have an EM of 10, which is much better. And if we come back in history, you can see that price, look, the EM has been improving. -15, -15, -14, 1 became positive, 18, 20, 30, 30, 10. So pretty interesting of a rally here. And this is really based on EM. So we can spot that stock around here. even EM18 is very good. EM20 is even better, but EM18 would be a $300 stocks all the way to 500. If you spot it at 20, it'd be $400 to 500. So that's really impressive. And by the way, if you go back in history, you might find Meta. There you go. So the system found Meta a while back, like at $46, right? And that was in 2014, right? So yeah, I mean, this tells you that you would have bought that stocks at $46 and made money, right? Well, at least research that stocks. I don't know if you would have bought it, but at least the system would have told you if it was a good one or not. So EM20 is very important. So what do I get here in sales? I get 20% growth. I get a little bit of a deceleration, so that's why it's not making the cut to the 20s. The EM20, a little bit of deceleration in the earning per share as well. 37. It was 60. It's decelerating to 37. So that's why people are skeptical on Meta right now, and maybe it's heading a little bit south or flat. So that's very important. So once you've understood the EM, that's a very good first step. Once you understood that, we can go into the timing momentum. So the timing momentum is really taking on the chart the 3 or 4 things that you see on the chart here, which are the timing momentum, timing bias, and market score, right? So those 3 indicators are telling you that it's a good timing or not a good timing. So what is including in those indicators? So first off, the timing momentum is really moving averages, distance to high, percentile. There's both a short-term component and long-term component. I mean, medium and long-term, I would say. That really, so it's a multi-time frame type of indicator. And it tells you if it's above 0, it tells you, well, it's a pretty decent timing. If it's below 0, it tells you it's not a good timing, right? And this is coupled with the timing bias, which is basically your very short 3-day window of the green curve, and it tells you if it's the right time again. And those 2 should be above 0. The third one is market score, so it's the ratio of the stock to the S&P. So you see how it is negative here, getting positive, and all 3 of them become positive, hence the green signal that we have on the signal here, timing momentum, right? But I mean, still, the earning momentum is not there. Let me see if I can find a good example here. Yeah, see, this is a good example. We have Meta over 30. So from a fundamental standpoint, it's a very good stock to get into. And then all 3 of these are above 0, right here. So that would be a good time to jump in or participate in the stock. So at least do your research and see where you can get. And from there, that was a month and a half ago, you already got 485 to 574, and then you get that rally here. Okay, so that's useful. At the bottom here, what we can see is that the yellow timing bias and the market score are actually heading below 0. So this is telling you avoid the stocks here, avoid the stock, and the green starts to get positive, then the yellow and the blue, and at that point it tells you, okay, you can go back in, right? 515, which is pretty amazing because it actually helps you avoid that downturn here, right? So that is very useful and very valuable. And the examples are everywhere, right? So see how Meta drops, the green is way below 0 and tell you not to get in at all. So it's pretty slick and useful. Sorry. So what did we say about this? How do we prove that it's actually working? So one of the ways is the journal. So the journal is actually recording. So this is not at all investment advice or anything. This is a paper trading bot that actually get in and out of the stock on a regular basis, based on the stop price that is placed at 7%. But the buy point is the same for strategy 1, 2, and 3. There's 3 strategies, but the stop system is different. So the sell signal is different. So one is a trailing stop. So it's basically a stop at 7% that trails the stock. So as it goes up, see, it got triggered out at 1.54%. That means the trailing stop has run with the stock. And so, you compute the P&L from there and you get 129%. Then there's the fixed stop strategy where we get 1,300%, bought in 2013 at 37, and the rest is history. It also got triggered in 2004, and got another stop in at that date here, and the stop is still at 459. Adaptive stop is more based on fundamentals. So if the EM drops below 20, it replaces stop at 7% below the day of earning, right? So that is very different. It's a stop based on fundamentals, so that's also unique. So again, not investment advice, just really helping you as a guide to see basically what's the opportune time to get in and if it actually did work in the past. Okay, so this is description here. You have the transcript from the company. So that is pretty cool. So you can look at the earning calls, you can read about it. So very powerful there. The matrix, we've been over it and we've gone over it. That's great. So one of the very important thing is the revision. So you really want to learn how to spot what Wall Street is thinking of Meta, right? So Meta here is basically growing, yes. And the earning per share revision are up. So since the 30th of October, which was the beginning of the quarter, the revision score went up 13%. And so that's pretty powerful, I guess. So, analysts revised up their estimates. We can look at sales as well. That went up and down a little bit. So that would be RSS here, 3%. Over a 90-day period, it's 14% up. So the analysts are still, I guess, positive on the stock, but it's a little bit less than the growth they had before, or the revision they had before. By the way, by clicking on that data button, you also have it as well. So you can click on data, and then you would go into revisions. And here it is. So you can have your revision score here very cleanly. You can see if it's up or down, and that you can run on any stock. So that's very, very, very important. So let's do a little bit of a pause here and go into the screener to see if we can put all of this into action and screen for it. So this is the screen at the bottom. I'm going to close all those sections here and start with a few fields. So first off, EPSM analytics. You can get the EM, the TM, the market score. When you click on it, they show up here on the screener. You can have the name here, EM, TM, and market score. Let's start with filtering the EM with a filter for 20, right? Because that's what I want. And then the TM greater than 0, because, as I said, it has to be positive. So as I filter real time, you can see those things are filtering real time. I went for 4,500 stocks to 143. So now I'm starting to get some interesting name. I can also filter for market cap. Maybe I want to, stocks above, let's call it 2 billion, roughly. So 2 billion market cap, and that's it. So one great thing with earning momentum is that not only you have the EM score, you can filter for it, but you can filter on any of these variables, growth and acceleration, and that's truly unique. So, for example, we can look at the earning matrix here, and you can take the earning per share quarter over yearly quarter, so Q over Q minus 4% change. If you don't know what any of those fields are, you click here and you have a definition. Earning per share change from 4 quarters ago, Q minus 4 to Q, right? So you have a definition here. And then I can say, you know what, I want that number to be fairly significant, maybe 10, 15%, or even 20%. And then I filter up, and then, I get 87 stocks. But what I can do is I can filter on acceleration. So I can filter on acceleration here, or how many quarters earnings has been in acceleration. And that's truly unique and rare. So let's have a look. Acceleration. So this is quarterly, yearly, acceleration, year-on-year change. But what I do really want is positive sales acceleration. And so I'm trying to find the field here a second. Positive sales acceleration. There you go. Positive EPS acceleration. That's why I'm painting all these new fields, in these important fields in red, because they're really key. So this is sequential positive EPS acceleration. So that means several quarters in a row, you want the acceleration to increase. So same with sales, sequential positive sales acceleration. So I'm going to take those two fields. I'm going to remove this one and put it in the screener. Okay, so first, I'm going to filter one here. I want to at least have the stocks have at least one sequential in positive acceleration for earning per share in terms of EPS, and one in sales, right? So now we have 36 stocks that are there that are truly starting to be top of the crop here, okay? So the next thing that you want to sort for or filter for is revision. So revisions, you can filter revisions by the percentage revision, so percentage change since the beginning of the quarter, okay? So that would be the change for this curve, the green curve, right? So from here to here. So that's 13%. So you can filter for that in the screener. Or you can filter for the actual value. So the value is 3.5. So which is the value we increased the revision score by since the beginning of the quarter. And that may be a little bit more relevant because you want to filter not in percentage, but in value. Because you want to compare stock, different stocks with one another. So this is the revision change in percent. This is the revision change in value. And this is the revision change 3 months rolling, right? So let's go to value. Let's look at the value here. And here I want the revision change to be positive, at least 0.1, okay? So now we have 30 stocks. And the funny thing is, maybe we sort this way and we take the best ones. And what do we see? We see Carvana, DoorDash, Verasite, Uber. And then we can click on Carvana and have a look at the actual revision. So not only Carvana is an EM27, which is truly amazing, but it has also been rallying for quite a while. Basically, grew up 5 times, quintuple. Yep. To 250 from 50. So that's truly impressive. You see as the EM become positive, 7, 27. So you really have like real momentum here. Revision is up. Sales are fairly flat, I would say, in terms of estimates, but revisions are up. And stock is in a rally. DoorDash, let's have a look at DoorDash. Same thing here. Great rally. Started a while back, like 12 positive, 7, 10, 19, 23 at $100. I went down a little bit, EM5, and then 21, and it's rallying again. As far as revision is concerned, here they are. So revisions has been down and then back up. And this is telling, right? So if we pull it on the chart here, you can see it's been down and then back up. And that uptick here produced this rally, right? So that's how revisions and its revisions are important. Very, very important. Now, what I want also is maybe the stock price to be greater since the beginning of the quarter, right? So for that, I'm going to use this field called price change percent, which is a price change since the last earning report date for the stock. Okay, so I want that to be positive. I'm going to close that. I want that to be positive, right? And, well, it doesn't make any changes because these stocks are already way positive. So that's good. But one of the things that I might want is not only I want the stock to be positive with good earnings, with momentum, but I want also the stock to beat the market. So beating the market is what? Beating the market is having that blue market score high up all the time since the beginning of the quarter. Not in the last week, not in the last month, not in the last 5 days, since the beginning of the quarter. So since the beginning of the quarter, you would go into price statistics, and you would take the ratio of the S&P. So you take the ratio in the S&P, and you want that ratio. So this is the change of the ratio of the stock to the S&P ETF since the last earning day. So let's take the stock's earning day, takes the S&P, does a ratio of it, and which one gets higher is better, right? So I'm going to filter on that. and filter just get guys that actually beat the S&P since the beginning of the quarter. Now I have 19 names, and I can actually sort on those names. And the best one is SoFi. Okay, so I can click on SoFi, and what do I get? I get a very, very steep slope, beating the market. As you can see, the MS has been positive all the way. It's EM20. It's in a rally. It was 28, 13, 10, 20. And yeah, I mean, it's really in a rally mode. And I mean, doesn't get any better than that, I would think. When you actually go up, let's say from $10 to 60% in 2 weeks. All right, don't think gets any better than that. Paymentus, pay. Look at those revisions, 64%, insane. Stock went from $26 to $37 in less than a month, I'll say. The EM was there at 13, and now it's 37. So really impressive performance there. And we can carry on. AVPT, 8th point. Okay, went from 13 to 17, beat the market. EM27 at 8, so it doubled in a few months. So truly, truly impressive there. So once you're done with your search, you can just save it. You click on screen, and then click on save. You give it a name. Let's call it Sunday test. And click on save, and I have it here, and I can, click and find it again. So yeah, I mean, so this is really impressive way of filtering, truly unique way of doing that. And this is what EPSMomentum is all about. So to simplify the life, and if you don't know where to start, if again, the videos are here to help you, but there are those buttons on the top, and very simply, if I only have 5 seconds, I can just click on best stocks. If I click here, I get the daily notification sent to my email. That is not bad if you want to get warned every day. And you click on best stocks, and it goes to the screener and filter the screener with the best stocks filters, right? And that gives you 81 stocks that are considered to be the best as per the system, the price change, market cap, and this is distance to high, 25% distance to high, but we can put 5% if we want. We can insert that field that we love here, the ratio of the stocks since the beginning of the quarter, ratio to S&P, filter by that, and we can get Palantir, 53% up, that ratio, boom, right? So very quickly, but there is other things. So I can look at the drift, acceleration. I can look at stocks that are losing steam or making new acceleration, or cheap growth, or technical, or revision winners. So I can click on revision winners if I want to focus on the revisions. This is what I get, revision winners. So Hot Bay Minerals, revision score is positive. Revision score and value maybe is high up, so we can filter that. Revision percentage is positive. 3 months is positive. EM we can filter further to, say, 15. We can filter distance to high further to, say, 9%, right? And we got 57 stocks, and then we have Weave Communication. And look at that, 23. Stock is in a rally. Revision is high up. Really impressive. The matrix has high growth and high acceleration. So really, really something impressive here. So this is the acceleration. We can go into the short corner, talk about the dark short and the dollar flow. We can look into the best trade. So I'll call that in a second. But one of the other tools that I want to show you that really makes our system so powerful with our user is the drift. So you click on here, post an announcement drift, and then get this picture. So if we go back to our favorite stock, Meta, for example, this is what you get. So look at the drift here. This is basically painting a forward view of where Meta is going. So it's a forecast of the stock, right? So we can type Amazon, we can type any stock and get a forecast of where the stock price could probably end up at the end of the 90 days. So we start at a quarter. We have a high band, low band, mid band, and mean band. So that's the mean. So how do we do this? Well, so first off, again, you can listen to the video right there, full video about it. But how do we do this? It's very simple. We take all the last 40 quarters, take all these quarters, we see how the price behaves for each quarter, because stock price breathe in quarters, right? And we see the market reaction in the first 24 hours of trading. And sometimes you have positive overreaction, sometimes you have positive underreaction, sometimes negative over or negative underreaction, right? So in any case, what we do is we bucket all the quarters into positive reaction, negative reaction, and so on. And we end up with those 4 scenarios. This scenario here has a 63% accuracy. So 63% of the time, the stock price lands in that range. You would think that's not much. Well, it's actually a lot, because you can take a position on the underlying and then write some puts or write some calls against it. And have a view of where the stock is going. So it's really powerful. So that's good. And you would think, so how was it in history? So you click on history here, and you can see actually for every single of these quarters what it was in or out or in or out. This one was out, but look at this, by only 2 days. So, not a big miss, but this one was out all the way and then finished inside. So in, and so on. And you can see the drift. And the interesting thing is we can see the forecast. So the forecast here is what we forecast on day 1, not on day 0, not the first day, 24 hour. Once the drift is created, we tell you we're forecasting that the price will go about 6.29%. Okay. Today it's 11%. Here we say it's going to go minus 0.33, 34, and it went just 127. So not too far. Here we said 10, it went 5. Here we said 17, it went 9. Here we said 15, it went 30. Okay, so this one we got it completely wrong, right? Not only was out, but this one was wrong. But you can see in history, how's the forecast and versus the actual, which is truly, truly impressive, really. Now, you can search on that, and you can go on the screener. Let me close all those categories here. And category you want to focus on is PEAD, post-earning announcement drift. And then from the drift, you can say, give me all the different drifts. So positive underreaction, positive overreaction. So I can have all that. So let's say I want positive underreaction, which is drift A, which is the best one. So they're all positive underreaction now. Filter by market cap a little bit. Right. And then the second thing that I want to do is maybe I want the distance to the end of the quarter from the drift in percent, right? So what does that mean? That means that the stock needs to drop to 8% to get to that point. So if we go to BAM, Brookfield Asset Management, the stock, so this one doesn't have much history. That's why it's all wacky here. Actually, let's fix this. Let's add more samples. So we want the sample size to be at least, let's call it 9. That would be those are the significant drift and statistically significant drifts. And now I can look at Shopify, which is 12%. So Shopify has 12%, I'd say, upside to get to the mean. Is that correct? Yes. So here, 115, it could go to 126, and that's just the mean of the drift, right? So Shopify has obviously been fairly volatile over time. That's why the drift is kind of wide. It's 40% accuracy here, so it's hit or miss, but it's 40%. It usually goes up 40% since the beginning of the quarter. So that's this, and yeah, so here we have a 12% distance to the mean of the drift. So what we can do is we can also look at the max of the drift, right? And so the max here, we have a 60% to the max of the drift, but 12 to the mean. Here, they're above the mean. These guys that are negative are above the mean. So let's have a look at the ones that still have upside. There's 4 of them. Welltower has another 3% upside, 7 and 3. And 20% if I'm aiming the max, right? So Welltower Inc., let's have a look. They're just below their mean. They could go to 165, roughly 144. It's EM24. The revisions are up, which is very good. And these are very very important metric and help you a lot for your options and stock pick, right? So that's very, very good. Okay, so here's the drift. So you can filter on the drift forecast, best drift or oversold drift, or the revision winners or technical. All right, so as you can see, there's a lot of tools there. You can make it very easy by just clicking there or clicking on open trades to see what the computer has found in terms of trades. And here they are. So the brand new trades that on paper that the computer has initiated. Sarepta Therapeutics, both at 130, 128, about here. It's now 120. It's the stop is at 128. It's been not performing well here, I guess. But so open trades, best stocks. You can, if you subscribe, you'll get the daily notification to your email. So that is very good. And yeah, so that's good. And then again, use all those buttons very quickly if you really want. If you only have 5 minutes a day, click here, get the stock, and then spend 20 minutes on that stock to review it. Pull up all those apps. You can have it on your phone, or on your email, or on the web, on PC. And if you want to dig further and really go down the rabbit hole, you can. You can drill down to the matrix, the numbers, plenty of fields here that you can search through, save your search, and that's it. If you have any questions, just send us an email. And we also do webinars on a weekly basis. So you click on the Knowledge Lab, and on the Knowledge Lab, you'll have full explanation of all the widgets, but also schedule for our webinars, and you can click on the webinars, and then we have weekly webinars on a regular basis, Tuesdays and Thursdays, and we can talk about all this. All right, I hope it was useful. Let me know if you have any question, and yeah, thank you very much for your attention and your time, and try to pick some nice stocks out there. Thank you very much, guys. Bye-bye.